Good afternoon, everybody, and welcome to our annual Reflections and Projections webinar for 2025. Each year, this is where we pause, we look back at how the property market actually performed, and then we use those insights to shape our outlook for what's to come next. Today, we'll be revisiting some of our historical editions of our National Top 10 Best Buys report, not only to celebrate what's already boomed, but to access whether those locations delivered on the fundamentals and cycle positioning we identified at the time. As always, our focus is always on long-term, lower risk growth, selecting markets ahead of the crowd and allowing time and compounding to do the heavy lifting. We'll also share the key trends we've identified in 2025 and what we anticipate for 2026 and beyond. We'll discuss some of the markets where momentum is building, where it's fading, and what risks investors need to be mindful of as the next phase of the cycle unfolds. And of course, today wouldn't be possible at all without the man himself, the predictor of these markets, our Hotspotting founder and Australia's leading independent real estate analyst, Terry Ryder. So Terry, we've got a big session planned today and we've maxed out our webinar capacity for the second time in a month, which is very exciting. What does that tell you about the sentiment that we're seeing in the market right now?
I think the market sentiment is as strong as I've ever seen it. As you know, I've just completed the quarterly analysis I do of sales activity trends across the country for the Price Predictor Index, one of our most popular reports, and we'll be certainly referencing that throughout the presentation today. But I don't think I've ever seen in all the years that I've been doing, 40 plus years, but I've been doing the Price Predictor Index for 11 years now quarterly, and haven't seen such universal strength of buyer demand across the country as we're seeing right now.
And many cohorts too, not just investors. You've got a big rise in the first home buyers, low stock levels everywhere. It's a mad time.
It's a perfect storm for price growth. We've got strong buy demand in most of the market jurisdictions across the country at a time when we've got shortages of everything that matter.
Yeah.
And so it seems inevitable that 2026 is going to be a year of pretty strong price growth in many parts of Australian property markets.
Well, if you'd like to get your presentation up on screen for us, Terry, I'll just do a little bit of housekeeping for everybody while we wait. So we're planning to have an hour session today. 45 minutes of that will be our Hotspotting Reflections and Projections presentation. But we'll try to allow for about 15 minutes worth of Q&A at the end. Now, given we have maxed out our capacity on the webinar today, we do anticipate there will be a lot of questions. So I'd urge people, get your questions in throughout the presentation because we will address them all first come, first served, meaning that there's probably going to be a lot of questions that do go unanswered today, I'm afraid. But Terry and I have put a bit of time in the calendar to follow up on email with anybody that we didn't happen to get to the questions today. So please put that into the Q&A panel and we'll get started. Thank you, Terry.
Okay.
No, not presenter view. Go to full. The other one. End of full screen mode. Yeah, that'll be fine.
Okay.
Beautiful.
All right. Okay. So we do like to think that we're what we do is science, Tim. It's not guesswork. There's increasingly not only technology but a lot of analysis based on the experience we have in the team in what we like to call the science of detecting and analysing change. I always like to think that the secret source of success with property investment is being early to detect change that's coming in the market. Change is a constant in real estate markets. We're going to talk today quite a lot about what's happened in the year that's just ending in terms of prices and other factors in the market, but particularly prices. But it doesn't necessarily tell us what's going to happen next year because the past does not necessarily inform the future. Change is always happening. And what we try to do at Hotspotting is be early, be the first, in fact, to identify the change and alert our customers to the change that's happening in the market. As we will see as we go through the presentation today, we've seen a lot of change in the pecking order of who's leading on price growth around Australia, and we're expecting to see further change as we go through the year ahead. So our agenda today, we're going to start with a market review. We're going to look at a report card because Later in the presentation in the webinar today, we're going to look at our picks and our best buys report that we've just pretty much literally today completed, which we'll be publishing very soon for our clients and customers. The locations we think are best to be focusing on as investors in 2026. But first, we're going to have a look at a report card of the identical report 3 years ago. We do make our selections, our hotspot selections, taking a medium to long-term view, not a short-term view. So we're going to look at how well we did with the best buys report we did 3 years ago. We're going to look forward, looking at the trends that we think would dominate in 2026 and the metrics that we use to make our forecasts. And we're going to look at the new edition of the Price Predictor Index, which we're in the process of publishing, and also the best buys report, which we'll be publishing in the next day or so. Looking at the big picture, Tim, while we're very, very strong in the belief that we don't have an Australian property market, we have lots of individual markets, there are some overriding factors that do impact across the country. Real estate essentially is local, and it comes down to what's happening with local economic conditions and other factors that relate to that. But the overriding national trends that do impact on markets across the country, and probably what we have on the screen, is there's 4 key reasons I think that why we have such strong buy demand in the market at the moment. We've certainly got very high population growth in Australia. We've had 3 years of very, very high net overseas migration levels. The numbers are actually reducing year by year, but they're still very high in historical terms. And so that's feeding into demand. Some are scapegoating overseas migrants for the housing crisis. Of course, that's we don't believe that's true, but it certainly is a factor in play in terms of feeding additional demand into the market. The government stimulus measures to assist first-home buyers, there's been a lot of talk about the negative impacts of the federal government schemes in terms of elevating demand and therefore pushing up prices and making affordability worse. But there are also state government schemes in play as well. So the combined impact of all those schemes, particularly targeted on first-home buyers or new home builders, means that we have additional demand coming into the market. The interest rate reductions we saw early in the year have made borrowing a little easier. And the big factor, we think, the one that's never talked about in media, is the infrastructure spend, an unprecedented high level of infrastructure spending happening across the country. $900 billion worth of projects currently happening or in planning across the country. And of course, they create enormous economic activity and jobs, and that translates into demand for real estate. So these big ticket projects are happening right across the country, and it's one of the reasons, or perhaps the biggest single reason, why we've got such strong real estate activity as we come to the end of 2025, creating huge momentum that's going to be carried through into 2026. And all that happening at a time of shortages of listings of properties for sale, shortage of rental properties, with vacancy still hovering around that 1 to 1.2% figure. And we're not building enough new homes, of course. We're falling further and further behind the federal government's press conference soundbite, 1.2 million new homes in 5 years, which was never realistic, and it's never going to be achieved. So high demand at a time of very low supply with no solution in sight means increases in prices and rentals in 2026 and beyond. Now, we'll just have an examination of where we're at with real estate markets across the country. And I want to start by looking at where we were 12 months ago. Because one of our popular themes is that we don't have an Australian property market. We typically have what we would call a 4-speed market. That's the norm in Australia, where we have some markets that are booming, other markets that have moderate growth, some markets that are stagnating, and some markets where prices are falling. And that's where we were at 12 months ago. At the end of 2024, we had Perth, Adelaide and Brisbane producing boom level growth in their house prices. We had Sydney and Hobart with moderate growth. Nothing happening in prices with Darwin and Canberra at that time, and Melbourne prices were falling. And that is the normal 4-speed market. But what we have right now is something very unusual. And we're going to examine the unusual nature of Australian real estate markets from 2 angles. One, we're going to look at what's happened with prices in the last 12 months. and we're going to look at what's happening with buyer demand, that analysis we do of quarterly sales data, which goes into the Price Predictor Index quarterly editions. So you can see what we have right now is a situation, and a very unusual situation, where all the major cities and all the major state regional markets have prices growing, both for houses and for units. And I can't recall a time, except perhaps in that short, sharp COVID boom in 2021, any time in the last 10 or 20 years when we've actually seen that, where we're seeing really good solid growth pretty much everywhere. So what you can see on the screen at the moment is, according to Cotality, formerly known as CoreLogic, the annual growth in median prices for houses in the capital cities. We can see that Darwin, in the previous slide I showed you that 12 months ago Darwin had zero growth. 12 months ago it ended last year with zero growth in property prices, and it's come from nowhere to lead the nation on price growth, almost 18% according to these figures. Perth used to be the market leader with several years of 20% plus growth. It's no longer leading the nation, but it's still hanging there. It's very stubbornly resisting any downturn in that market. The demand is still pretty solid. It's no longer at the peak of its boom. It's still producing solid price growth. Brisbane's doing very well. Adelaide's starting to fade a little bit based on these numbers. It's been above 10% for 5 years. It's been an extraordinary market, but still producing solid growth, and the buyer demand figures are still very solid for Adelaide as well, but starting to just slip down the pack to below 10% annual growth. And we're starting to see Sydney and Melbourne rising up, because again, if you that previous slide showed Melbourne this time last year was -3% with its property prices, and Sydney was zero. So they're not by no means leading the nation, but those figures we can see on the screen for Sydney and Melbourne represent a substantial improvement throughout 2025. Canberra also has come from pretty much zero growth in recent years to now starting to produce growth, and we'll talk a little bit more about the Canberra market because it's one of the rising markets in the country in terms of sales activity. And Hobart is now starting to rise, and I would suggest that when we have a look at these numbers 12 months from now, we're going to see very different things. We're going to see Melbourne a lot more prominent. I think we're going to see Hobart a lot more prominent as well.
Well, it just goes to show, look how much it's changed in the last 12 months, Terry.
Well, that's right, and we keep saying it, but change is a constant in real estate, and we can't assume that what happened last year will happen next year. And that's why,
if there was two slides that could summarise the fact and get people to understand how markets are cyclical, it's this. And it goes to show, yes, we can have time in market, and that'll always do well for you. But if you can time the market as well, you can get that short, sharp uplift as well.
Yeah, and in a few slides, we're actually going to put three sets of figures side by side now, 6 months ago and 12 months ago, and just demonstrate just how much change has happened and how rapidly it's changed. Now, for the regions also, we have a situation where all the regional markets for houses have shown some level of growth in the past 12 months. In fact, if we'll just go back to the previous slide, the average for the capital cities, 7.9%. The average for the regions, 9%. So we still have a situation where the regions are outperforming. I think the capital cities have closed the gap a little bit, but certainly in the last 5 years, all of the best locations for capital growth over the past 5 years have been regional. And the regions are still doing extremely well, outpointing the capital cities, but the margins are narrowing. Western Australia still very strong. Queensland doing very well. South Australia, we like to refer to as the unsung hero of Australian real estate. It just keeps producing price growth in those markets like Mount Gambier and Murray Bridge and Victor Harbour and Port Lincoln. Doesn't get a lot of national attention in terms of the discussion about where people should be buying, but it's always been a performer every time we've looked at the numbers over the past 5 years. But all the regional markets have had some level of growth in their house prices, and if we have a look at units, this is a situation that we're watching very closely, and we've talked quite a bit about it in some of our recent webinars, Tim, about what we call the rise and rise of apartments. Because we all know the dominant paradigm has always been that houses on land show better capital growth over time than units do, but we believe that is changing, has changed. And you can see that we've got some very strong growth in unit prices in many of our capital cities. Now, again, Darwin's right up there alongside Brisbane on 15%. That's excellent growth. We're not used to seeing that level of growth in unit prices in our capital cities.
Not at all.
But it's starting to become common. We're starting to see more and more instances where units are actually outperforming house markets in the same location in terms of annual price growth. Perth is doing very well. In fact, Perth unit prices are rising faster than house prices at the moment, as the affordability factor that drove that Perth boom is dissipating. Not so many cheap bargain buys available for houses in Perth anymore, so more and more buyers are pivoting towards the cheaper product in the unit market. Adelaide, again, very solid. Hobart's doing okay. We're starting to see some moderate growth emerging in the Sydney and Melbourne markets. The average for the capital cities is 5%, not as high overall as for houses, but not far behind. But again, if we look at the regional markets, you see actually the figure hasn't appeared there for the average for regions, but it is around about 8% from memory as the average for unit price growth across the regional markets of Australia. So again, the regions outpointing the capital cities on units as well as for houses. But we can see that South Australia, again, very prominent in the regional unit markets, and Queensland and Western Australia also doing very well. Now, this is that those three slides side by side that I referred to a moment ago. On the left-hand side, the situation as it was at the end of 2025. And then 6 months ago, in the middle of 2025, we can see that Perth had slipped down the rankings. Adelaide was now on top. Darwin was starting to rise. At the beginning of the year, it was on 0% in terms of annual price growth. Halfway through the year, 6%. If you look on the right-hand side, Darwin 18%. So it's gone from 0 12 months ago to 6% 6 months ago, and now 18% growth. That's how fast things can change in real estate. We're seeing Perth down a bit and then up a bit more. Adelaide hanging pretty solid, but overall Adelaide's level of growth has dropped from 12% a year ago to 10% six months ago, and now 8%. So an indication that after 5 years of really strong growth, Adelaide's level of price growth is starting to moderate. And you'll see Melbourne's gone from -3% to +2% to +5% on those figures. Canberra also going from 0 to 1 to 5%. Hobart starting to produce slightly better levels of growth as well. So quite a big level of change in a very short space of time. And we're actually, I think it's fair to say that, the 40 plus years that I've been researching and analysing real estate, change has been a concept, but I think the pace of change, Tim, is actually gaining. I think things are happening faster.
I think we've also got to reflect, and there's a lot of people that have been investing or working in the industry over the last 5 years that may not have been in the industry before that. And this is not the norm. I mean, we go back prior to COVID, it was pretty mediocre growth in most of the country for a very long time.
Yeah. Well, I mean, there are factors in play, and I think, one factor in play is that we have a lot more buyers agents out there, and in some instances, I think the buying activity of some buyers agencies is actually inflating markets almost artificially.
No doubt, absolutely no doubt.
Yeah, and I think it's appropriate to put out a word of caution to people watching and listening today, as investors and prospective investors, that you need to be very, very careful of that factor. As we'll come to discuss when we get later in the presentation talking about our picks for next year, we've actually removed Darwin from our best buys report because we just feel that it's become too hot, too fast, and it's become almost a dangerous market. It's very, very hard for anybody.
On that note as well, Terry, it's worth noting that it's really easy to jump on the hot thing, isn't it? But when you pick Darwin, that was going back 12 months ago, where it had been on 0%, 0%, 0%, and in some cases probably negative growth for a few years. And this is what separates us from a lot of other analysts is that we're forward looking with our research, and you can't make decisions on this based purely on real estate data. You have to look at everything else that's happening in a market for this to happen. So we predicted that market, look what's happened, but at the same time, we also know when the right time to be easing off on markets are as well. And as you say, this is a hyperinflated market. It's not a big market at all, and it does represent, some concerns for people getting in at the tail end of this spike.
Yes, that's right. So it's a case of beware there. We first put it in our best buys report 12 months ago when it wasn't showing any growth. We could see what was coming because there are some valid reasons why we would expect the Darwin market to grow, but it's been further inflated by mass buying by some buyers agency, and it's got to the point where we think a word of caution is definitely appropriate and necessary. Also want to look at vacancy rates, and this is a graph from SQM Research, which we find is a good source of information about vacancy rates across the country. And the thing that stands out for me here, this little thing here is probably in the way, but what it shows us is that there's no point in the last 20 years in which the national vacancy rate has been as high as 3%. And the industry benchmark has always been that 3% represents, in terms of vacancies, a balanced market where there's a good supply of rental properties in the market and rents will be stable. And anything under 3% is tending towards undersupply, shortage, and therefore upward pressure on rents. So we haven't had a vacancy rate as high as 3% any time in the last 20 years, but certainly in the last 4 to 5 years, vacancies have been below 2%. They've been hovering around 1%, and that's where they still are. And that represents chronic shortage, and it explains in very simple terms why rents have been rising in so many places and continue to rise, putting pretty serious pressure on particularly young Australians who are in the rental market, making rental affordability one of the ongoing daily issues in news media. Just looking at the vacancies from another perspective, recent figures again from SQM Research showing, nationally 1.2% was the vacancy rate in October. 12 months earlier, in October 2024, it was 1.2%. So we've been stuck at that around that level for 4 or 5 years now, and it's an indication that elected representatives haven't moved the dial one iota in dealing with this really serious problem that afflicts the country. It's such a problem for so many. About a third of our households are renting, and rents are rising because of what we see on the screen at the moment. Vacancies well below 1% in Brisbane, Perth, Adelaide, Darwin, and Hobart. 0.4% in Hobart. I would also
you can't rent a doormat in Hobart at the moment.
Exactly right. In a little while, we're going to be talking about some of the forward-looking indicators that we look at, because our emphasis is always on the future rather than the past. We take interest in what's happened in the recent past, but it doesn't necessarily tell us about the future. One of the forward-looking indicators, if there's a market where vacancies are very low and rents have risen strong, but prices haven't moved recently, that's an indicator that prices are probably going to be moving very soon in that market. And Hobart is a case in point. The lowest vacancies amongst the capital cities of Australia. Good rental growth has been happening there as a consequence, but we haven't seen much in the way of price growth in the last couple of years. And as we're going to discuss in a little while in this presentation, we do think that Hobart's going to be one of the markets where we're going to see some substantial price growth in 2026. Okay, so supply in the market, listings. Now, this is one of the significant factors. It's not just the shortage of rental properties, and it's not just that we're not building enough new properties, new homes. Construction is well below the levels that we need to deal with our growth. But listings of properties for sale are very, very low, and this is making markets very competitive, and it's one reason why we have prices rising in so many places.
Probably worth noting, Terry, it doesn't say it on there, but that's year on year, so that's a 12-month change.
Yeah. So what we've got nationally, listings of properties for sale, according to SQM Research, are down 12.4%. On the right-hand side in the panel there, we've got the situation, the annual change in all the capital cities. You can see that Darwin, where demand has been so high, listings have dropped 37%, which is extraordinary.
Some pretty happy real estate agents in Darwin at the moment, I'd say. They've had a bumper year.
Well, they'll also be very frustrated real estate agents. They probably know that if they could get more stock to sell, they can
Yeah,
make a lot more
true.
money and make a lot more sales. But the problem is the lack of listings.
Yeah.
It's a problem for everybody, the selling agents, the buyers agents, and of course the investor buyers and the home buyers are trying to get into that market. But in every capital city, there's a substantial drop in annual terms and listings, but particularly strong in Brisbane and Perth and Darwin, but noticeably also Hobart listings have
Mm.
dropped 40%, as that market just starting to heat up. So we're going to see some heavy pressure on prices for that reason as well in the Hobart market as we will get into 2026. And just putting those listing situation numbers into context in another way, what it means is that the total number of homes for sale across Australia have dropped from about 272,000 a year ago to 238,000 now, which means that there's almost 34,000 fewer homes for sale than there was 12 months ago at a time when buyer demand is so strong.
Yeah.
Okay, so now we're going to start to look forward to what we expect to happen in 2026. But first, we just want to have a look at our report card. And the purpose of doing that is not just to show how clever we are and being successfully forecasting growth markets into the future, but to emphasize how important it is to get your locational choices right. If you choose your locations well, you can have a reasonable expectation. Certainly this has been the case for the past 5 years. I've seen properties double in 5 years, and that's what we've seen with our selections. We're going to have a look at our best buyers report that we published this time 3 years ago and look at the performance on price in the locations that we selected. And the average result across all those suburbs in the various local government areas that we highlighted 3 years ago is 50% growth in prices, or a rate of 17% a year. And that means if that rate of growth is maintained, if that annual average growth rate is maintained, that means prices doubling in around 5 years or less. And some locations have done better than that. Now, we are at pains to point out that when we publish reports like the Best Buyers Report, we're not saying that these are the locations that are going to show the best growth in the year ahead. We take a medium to long-term view, so our focus is 5 to 10 year outcomes. We're very happy if prices rise strongly in the next 12 months, and in some cases they will, but we're not too perturbed if they don't, because we're taking a longer term view.
It is worth noting that in the majority of cases they do, though.
That's right. In most cases they do,
Yeah.
but not always. And we also looked at our selections 1 year ago, and some had done very well, some less well, but some of those that haven't yet produced strong 1 year growth are places where we have an expectation in the next 2, 3, 5 years they're going to be some of the market leaders in the country.
Yeah.
So we try with the Best Buyers Report to identify the future growth markets, getting ahead of the cycle, taking that medium to long-term view. We do focus our attention on local government areas rather than individual suburbs. I know media is always full of the top 10 suburbs for growth. We don't believe that that's a valid way of looking at real estate markets. Real estate growth happens in clusters. It's very rare for an individual suburb to rise and outperform on all the suburbs around it to do very little. If one suburb in an area is rising in price, then it's likely that its neighbours are also rising in price, because the things that impact prices and cause prices to grow usually ripple out across a region, not just in an individual suburb. So we tend to make our selections based on local government areas for that reason. Now, looking at that report card for the Best Buyers Report published in December 2022, 3 years ago, 100% of them have delivered price growth, and 8 out of the 10 have delivered growth of 50% or more over 3 years. And annualized, that means prices growing 17% per year, which is a great growth rate. And typically, if you'd bought houses in these locations at the median price 3 years ago, the typical capital growth would have been at least 200%. Sorry, $200,000. Let's get that right. But in some cases, up to $300,000 in capital growth. And we're not talking about spending $1 million and getting $200,000 in capital growth. We tend to recommend areas that are affordable. So in some cases, these were areas where you could buy houses in the $300,000 and $400,000, but have received over 3 years that level of capital growth, which is extraordinary in percentage growth terms. So we are at pains when we make our selections for the Best Buys report to choose locations that are early in their growth cycle. It's one of the reasons why we have removed Darwin from the report we're about to publish for early 2026, because it's already shown such strong growth. You won't find anywhere in the Perth market in this new edition of the report, or in the current edition as well, because it's already had 3 years of very, very strong growth, and same with Adelaide. So it's very high in the cycle. We're recommending areas that are early in the cycle, so that if you're buying there, you're buying in markets that aren't so competitive, but have got great prospects for growth. And because they're early in the cycle, in 3 to 5 years' time, you should be seeing, outperformance in terms of capital growth. And we're going to talk
And Terry, just quickly on that, we often do get people who say, "Look, I bought your report last year, and I've bought into this location. It's been going really well, but I'm really worried because it's no longer there." That doesn't mean that it's no longer a good place by any means, but we're saying you've timed it well already. The fact that you bought it then and not today, you've already done that well. So it's certainly no reflection of the place changing in any way. As we say, we've got a long-term view on this right from the beginning, but markets, it's about timing. And if we can get in there nice and early, that's where you'll get the best performance.
Yeah, and we are actually, when we get to looking at our selections in the new edition of Best Buys, we also focus on, here are some of the locations we haven't included, and here's why we haven't. So we'll talk about that. So our selection framework, we do use our empirical formula, which I'll touch on in a moment, but we're looking for rising buyer demand. We're looking for tight rental markets, of course. We're at pains to focus on locations that have strong, diverse economies. We're very reluctant to recommend areas where it's just about agriculture, or it's just about tourism, or it's just about the resources sector. Those markets can be very vulnerable if there's just one strong economic sector driving everything. So we're looking for 4, 5, 6 different economic sectors that are strong in a location. We're very, very big on infrastructure investment because it can be an absolute game changer. And if you look at the locations that led the nation, the national top 10 for capital growth in the past 5 years, one of the things they have in common is strong, diverse economies with an infrastructure spend, new infrastructure investment in the mix. So the key message is, we try to pick them early. There's not much point in telling people about markets like Darwin now. We were telling people about Darwin a year ago. We were telling people about Melbourne earlier this year as well. And we're now starting to see some pretty strong price results, which haven't yet been fully reflected in the median price data that's coming from Cotality and PropTrack. But as we get into next year, we're going to see those growth figures for Melbourne rise and rise, because we're already seeing very, very strong buying activity in Melbourne. We were telling people about Melbourne being on the cusp of an upcycle at the right
6 or 9 months ago.
Yeah. Okay. So let's keep moving. These are some of the results from that report of 3 years ago, and we recommended the local government area of Onkaparinga in the south of Adelaide. We recommended Toowoomba in regional Queensland, the Ipswich local government area in the Greater Brisbane area, Rockingham in Perth, Salisbury local government area in the north of Adelaide. And here are some indicative suburbs, what the median price was 3 years ago and what it is now, and what that represents in terms of 3-year price growth. So Christie's Beach, the median price is now 79% higher than back 3 years ago when we recommended this location. You can see that many of the suburbs have had 50% plus growth. Some of them, like Harristown, and it's almost slightly below 50%, but still a very good growth rate. Goodna, a very average down market suburb in Ipswich City, in the Greater Brisbane area, up 61%. Riverview, not so far down the road from Goodna in Ipswich City, up 70%. Some of those Rockingham suburbs they've all done better than 60%, but some better than 70%. Also, Para Hills down the bottom of the slide there, up 74%. All of the suburbs of Townsville have had extraordinary growth. Quite an exceptional market. Probably, if you had to pick one market that's been the capital growth star in Australia in recent years, and particularly in the past 12 months, it would be Townsville. It seems like every suburb in Townsville has risen at least 20% in the past 12 months. And we're very happy that we were alerting people to that coming growth 3 years ago, because every suburb in 3 years has risen 60%, 70%, 75% in the case of some of them.
As you say, you pointed out before, some of those markets that are a little undercooked in terms of growth are markets that we do anticipate to see that strong growth in the near future. Your markets like the affordable pocket of Hume and things in Victoria, are certainly on the radar for strong growth over the next 2-3 years.
Yeah, well, those markets and other Melbourne markets are really just coming to a period of strength now. So
yeah,
but they have shown growth, and if you'd bought in some of those Hume suburbs, you still would have had some. You would, in the case of Coolaroo, you would have had almost $100,000 in capital growth, and that's not to be sneezed at. It's just not as spectacular as some of those other locations. But fast forward a year or 2 years, and I think we're going to see much higher percentage growth figures there. We'll keep moving. We've got quite a lot to get through, and we want to allow some time for people's questions. As we often say, all that data is very interesting, but it's backward looking, doesn't necessarily inform the future. And of course, that's our business in Hotspotting, trying to predict the future. And to do that, we have the metrics that we use that we think are forward looking, that are forward indicators of what will happen with prices. And we encapsulate a lot of those factors in what we call our empirical formula. Empirical evidence is the evidence based on actual experience rather than theory, so it's a nice word to use in this context, but the word empirical is also an acronym. So each letter of the word empirical stands for something important. The E is for economy, that strong, diverse economy that we always look for. The M is for market size. We don't recommend small towns. We like there to be, or ideally, a local government area population of at least 50,000. Sometimes we'll go below that in special circumstances if there's other factors in play. But we do like to see a certain quantum size in the market to feel comfortable that it's a market that can support sustainable growth in population and property prices. One of the I's is infrastructure. The other I is for increasing employment, because if the economy is strong and rising, we're going to see jobs being created. And where jobs are being created, there's demand for real estate, either to rent or to buy. Infrastructure, of course, we're going to talk a little bit more about that in a moment. The rental market, if vacancies are low and rents are rising, it's very rare when you have that situation in the market, the prices aren't following suit or will eventually follow suit. In terms of capital growth, it's sales activity we monitor as a forward indicator of near-term capital growth. Affordability rules at the moment, so that's a very important, the letter A in the word empirical is very important. Affordability, it really stands out, Tim, in our analysis for the new edition of the Price Predictor Index, that the markets that are pumping the strongest are the ones that have an element of affordability. And the L, of course, is low risk. We're not going to be recommending mining towns or tourism enclaves on the coast unless there's some other factors in play. So we're always mindful of the risk factors with our empirical formula. one of the big ones is infrastructure investment, and I do feel that sometimes I bang on about infrastructure way too much, but it really is important stuff.
Yeah.
And when you realise that that figure on the screen represents the projects that are currently happening in Australia in terms of infrastructure, hospitals, university campuses, airports, motorways, rail links, and an increasing impact from these big data centres, these AI data centres that are being springing up all over the country. These are multi-billion-dollar projects. Each one of them.
Not to mention the amount of hospitals popping up and things. And I know we did an episode on Ticker about that recently, but the amount of jobs that are getting created off these $2 billion hospitals that are popping up all over the country.
Absolutely. It's my personal favourite, and I do talk about hospitals a lot. And I say to people, if you want a simple formula that works in terms of choosing location, look at where they're building these big billion-dollar hospital projects. Thousands of jobs in building them, but even more jobs in running them when they're finished, and the impact on the local property market, because people like to live close to where they're working. Right now, there's 144 substantial hospital projects happening across the country, totaling investment of $116 billion. There are hundreds of thousands of jobs being created by those projects.
I think there might be a few people on this call writing down some notes at the moment, Terry.
Look, I think it's such a powerful tool and one that works. So some of our forward-looking indicators, low vacancies rates are, if rents are up and prices haven't moved, prices will follow. We've seen that in the past. It happened in Perth before it had its boom. It had a couple of years of strong rental growth but no price growth. Sydney did that 10 years ago, had a couple of years of strong rental growth but no price growth, and then what followed was years of really strong price growth. So that's something to look for, and Hobart is a case in point right now. Days on market coming down, listings of properties for sale dropping, and that's a factor across the country, and of course sales volumes, which we monitor every quarter. For the Price Predictor Index, and we're about to publish our new summer edition, and look, as it says, there are strong buyer demand in all markets. I just haven't seen it so strong. I've been doing this report every quarter for 11 years, and I haven't seen buyer demand so strong in so many places as it is right now. We normally have winners and losers in the Price Predictor Index, and we have steady markets in between the two extremes, but right now there are no losers in our category system.
Takes us back to the COVID days where FOMO was absolutely rife.
Yeah, that's right. Yeah, after the economists warned us that markets
20%, 30% drops. Yeah, exactly.
And the opposite happened. Do not listen to the bank economists, whatever you do. We have the smaller cities rising. Darwin's been leading, we know that, but Hobart is starting to rise very strongly in terms of sales activity. So watch out for price growth there. But also Canberra is on the rise, particularly its unit market, which is part of another major national trend, a paradigm shifter, we believe, the rise and rise of apartments. We're seeing market share of apartments in city markets getting bigger and bigger. Canberra's a big mover in that regard, but we're seeing the market share of units as a percentage of total residential sales rising in Sydney, in Brisbane, in Melbourne, even in Darwin, where houses are relatively cheap. We're still seeing a massive increase in buyer demand for units up there. Affordability definitely rules. It's getting harder and harder to find. So a lot of the buying focus, both for home buyers and for investor buyers, is chasing those areas that offer affordability. And it's one of the reasons why we're seeing more people buying attached dwellings like units and townhouses. Tasmania is emerging. Now, just remind everybody, Tim, that Pippa, we're one of the major sponsors for Property Investment Professionals of Australia, Pippa, and last year they did some research. Where in Australia have we had the best capital growth over 20 years? Number one in Australia was regional Tasmania, and number three was Hobart. So Tasmania's track record on capital growth has been very good in the past. Doesn't mean it's going to be in the future, but we're seeing a big uplift in buyer activity, and we believe that's a forerunner of a return to strong price growth for the markets of Tasmania, Hobart, which is one of the most affordable capital cities, and cities like in the north like Launceston and Burnie, and also Devonport is attracting some buyer demand. Affordability is one of the factors that's driving both home buyers and investor buyers to look at those markets. There's no doubt that Victorian markets are rising. Investors have been turned off by the high taxes and the not terribly friendly state government, but I think the value for money buying in both Melbourne and some of those Victorian regional markets is so attractive now because they
I
haven't
think,
had.
I think the other thing, Terry, is off the back of so much growth in some of these regional markets elsewhere, the yields just aren't stacking up anymore. So you go to Victoria and, notoriously had lower rents for many years. They're actually on par now. And, you take into account your land tax and your higher compliance and things like that. But their insurance levels are far greater than what you're getting into a lot of those other regional pockets in other states. So when you actually look at them side by side, Victoria is absolutely something you can't contemplate now. It's if you're an investor crunching your numbers, it makes sense, and the growth plays absolutely there.
Yeah, and the value for money buying in Victoria and including in the regional markets is really quite noteworthy at the moment. Bendigo, Ballarat, Geelong, Shepparton, but in particular the towns of out Gippsland Way, the Latrobe Valley towns. We're about to publish the Price Predictor Index with our national top 50 supercharged suburbs for houses, and Traralgon, Morwell, Moe are all in the top 50.
Mm.
Because the uplift in buy demand is so dramatic there. Both Moe and Moore are median house prices in the 300,000 still, despite the fact that they've got quite a strong track record of growth in the past. So these are markets to watch, and we also note the ongoing resilience of Perth and regional Western Australia beyond the peak of their substantial booms, but still showing price growth underpinned by one of the nation's strongest state economies.
And one of the lowest levels of listings too.
Yeah, absolutely. So we also have a top 20 local government areas when we analyse the data for the Price Predictor Index. You can see the Latrobe's there, I've just mentioned, Geelong's there. Some of the local government areas of Melbourne, like Frankston and Casey down in the far south west. In Tasmania, Glenorchy, which is part of Hobart, and Launceston, the city in the north. Palmerston for house sales in Darwin, and the city of Darwin, particularly for unit sales. In the Northern Territory, very, very strong local government area markets. Still some strong ones in Perth, like Stirling and Melville, sort of north and south of the middle ring areas. North and south of the Perth CBD, and Mandurah, which is on the fringe of Greater Perth area in the south, a wonderful sort of water-based environment. It just keeps on keeping on that market, whereas it's pretty clear that Geraldton and Bunbury are past the peaks of their substantial booms. Mandurah just keeps on attracting buyer demand. We've got Brisbane City, Moreton Bay, very strong in Brisbane. The Gold Coast, after 5 years of growth, is still pumping really strongly. The Sunshine Coast is entering a new cycle of growth. We're still seeing growth markets in Adelaide, like Playford, and on the fringe of Adelaide, Mount Barker, and Mount Gambier in regional South Australia, still getting really good buyer demand. And a number of strong markets in Sydney and throughout regional New South Wales, particularly Tamworth and the Hunter region. And those markets in Sydney that stand out primarily are markets that are dominated by unit sales, which provide some level of affordability in the Sydney market. We tend to think that people focus a little bit too much when they're making selections as investors on the quality of the individual property and the street that it's in and the suburb that it's in. We certainly preach the mantra that it's the broader area that matters the most. Most of the heavy lifting on capital growth is done by the actual selection of the town or the city or the local government area. And in that regard, we support the research that was published by Simon Presley of Propertyology. He says that about 70% of the capital growth comes from the selection of the city. Townsville is what was important 3 years ago was to buy in Townsville. And if somebody said which suburb, well, it doesn't really matter because every suburb in Townsville has had extremely good growth. What suburbs in Adelaide have had that exceptional doubling of values in the last 5 years? Well, pretty much every one of them. The important thing was buying in Adelaide, not which suburb or which street you were buying in Adelaide. So keep that in mind when you're looking at location.
Interestingly, if you asked a lot of investors, especially first-time investors, what one of the most important things to them would be, they'd probably flip this upside down and say purchase price would be one of the most important factors.
Yeah, absolutely right. But obviously, get the property for the best price that you possibly can, and a really good and a true, genuine buyer's agent can certainly help you with that. But it's not the big factor that if you buy a great asset at a great price in a great street, if the overall location's not strong with a strong underlying economy, you're not going to get the capital growth you're looking for.
No, that's right.
Okay, so just getting towards the end of the presentation, looking at our choices for the new edition of Best Buys 2026, which we're publishing even as we speak today. Some of the places we excluded Darwin for the reasons we've already articulated. Perth, we've also talked about Perth is still a solid market producing growth, but it's had 3-4 years of really strong growth, not the right time to get into that market, we believe. Same with regional Western Australia, generally speaking, in Adelaide. And Gold Coast, one of the strongest markets in the country. Why isn't it in our Best Buys report? Because it's had 5 years of growth and prices are really high there already. So there's not much point in saying to people, this is a future hotspot. It's already been hot for 5 years. And our modus operandi is identifying the areas that are going to be the hot places in the next 1, 2, 3, 5 years and beyond, we hope. So these are our selections. Brisbane Inner, where as an example of unit markets that are coming really strong. We think that 2026 is going to be a lot of people buying apartments in that sort of inner ring of Brisbane, thinking about the 2032 Olympics in particular, understanding that...
but underpinned by massive undersupply. That's not going to change anytime soon.
And a huge infrastructure spend, even without considering what they're going to build for the Olympics. It's already a big infrastructure spend happening in Brisbane. Population growth, strong economy, and as you say, Tim, strong undersupply. Hobart, it might surprise some people, but we've put in there number 2 on our list. It was already in the previous edition, but we've elevated it up the rankings because we can see the sales activity rising. We know that vacancies are the lowest in the country and rents are rising, but we haven't seen much in the way of price growth yet, but I think that's about to change. Sunshine Coast is now into a new growth cycle. Back in 21, 22, around about that time, it was a national leader on price growth and had a pause. It's a second wind market. It's caught its breath and it's now starting to sprint again. Not a particularly affordable market, but some of the unit markets represent good value for money buying in particular. We've taken Frankston out. Frankston's been in the report for most of this year in the southwest of Melbourne, but it's already become quite hot. As I think, Tim, you've attended some auctions down there in recent weeks, and some amazing results being achieved down there.
Some great results for vendors, not so much on the buying side.
Yes. One of the factors there is one of these big hospitals, a $1 billion plus hospital, which is just being completed. So, it's already a good place to buy anyway for lifestyle reasons, for affordability reasons, but that hospital is a game changer. Now, the city of Casey, right next door, is going to get lots of benefit from that big hospital project as well, and it's got relative affordability, and the sales activity figures are just really strong in Casey's, and that's a forward indicator of prices moving. We've talked about Launceston. I know you're pretty familiar with Launceston, Tim, because you've been there a few times recently, and the value for money buying there is quite impressive. Plus,
it's certainly heating up. We had a listing the other day that had 16 offers above asking. It's certainly got some attention on it now.
Yeah, and big infrastructure investment happening there as well. One of those big AI factories, $2 billion project happening. Tamworth, very, very strong numbers for Tamworth. Big infrastructure spend happening there. High level of affordability. Parramatta, we're thinking mostly units there, 70% plus of all the sales in the city of Parramatta, not the suburb of Parramatta, but the whole local government area are units, and you'd be buying in the 600,000 or maybe 700,000, which in Sydney terms is relatively affordable. Geelong is just one of those places that it's always going to be a great place to own real estate. I think coming into another period of strength, very strong economy there, great links to Melbourne, great lifestyle because it's on a peninsula, with surrounded by water almost on 3 of the 4 sides. Hunter Valley region, very strong numbers, diverse economy, big infrastructure spend, coming into another period of growth. And I mentioned earlier the Latrobe Valley in regional Victoria, where so many of the main towns there are attracting rising buy demand, with affordability a big driving factor. What we expect to happen in 2026, the year will start with the bank economists forecasting that prices will fall because interest rates are going to rise maybe later in the year, and they'll be wrong as they are every year, so just ignore them. We think prices will rise in most jurisdictions in 2026 for all the reasons we've talked about: the ongoing shortage, the government stimulus, the high population growth, and the big infrastructure spend. And we think that the price growth leaders will be Melbourne's going to feature, Brisbane will still be there, Hobart will feature, Darwin is going to still be producing strong price growth in 2026. And some of those regional markets that haven't featured in recent years, like Victoria and Tasmania, are going to be rising up the ranks. Vacancies are still going to be low, and rents are still going to be rising as much as the market can sustain. Although there's a bit of a ceiling, I think, beyond which really rents can't go, because the capacity of tenants to pay more and more is limited. So Tim, perhaps you'd like to just talk us through some of the special offers.
Yeah, we've as we tend to do when we start a presentation like this, we can often get a bit excited and go a little longer than we planned. So we've almost taken up the full hour just doing a presentation. I have been monitoring questions, and we have covered some of the questions' answers throughout the presentation anyway. But we will whip around and try to give some shotgun-fired answers to you, and then we'll also leave our personal emails on screen at the end of this presentation for anybody who didn't get their answers and would still like them. But as you can see on screen at the moment, we're actually offering strategy and mentoring sessions for the month of January to start the year off with a bang. Get the advice that you need in terms of portfolio reviews, more in-depth analysis that is more tailored to you. And for anybody who takes up a strategy session with myself or Terry in January, you'll get a free signed copy of Terry's recently published 5th book, Terry?
Yes, the 5th one. Yeah,
the 5th one he's had published. So Why Property Values Rise, you'll get a signed copy of that. So when you go through the checkout using the QR code there, if you do want to take us up on that offer, just put your postal address in there, and we'll also send that a copy out to you. And then next slide, Terry. We also have our Best Buys report, which we've talked a little bit about today, and obviously shared some of the insights from that report. We're also going to do an offer. If you buy that one, we'll also send you a free copy of Terry's book, and he'll be nice enough to sign it for you with a nice little Christmas message. And if you put your postal details in there, we'll send that out to you with no postal fee. So that's the 2 offers that we have for today. We're going to go to Q&A. Just lastly, to wrap things up, I just wanted to say a really big thank you to it. We've had an amazing response to not only this webinar, but in throughout the year. Fantastic engagement from our customers, not only members, but anybody who's in our ecosystem that's joining these. We really appreciate the support throughout the year. Over the last 3 years, we've averaged anywhere between 48% and 51% growth year on year, and we can't do that without the support of our customers. So that truly helps us continue to innovate. Some of the things that we've been lucky enough to achieve over the last sort of 18 months is 3 national awards that have recognised our innovation and our adoption of AI that's helping with our predictive methodology, and none of that will stop. Our mantra really is to continue to invest in the businesses and the resources that we can supply to our members. This year we had a massive hire in Cameron Cusher, who's helping us with our research and development. He's helping us build design, and we're about to launch a brand new website and brand new members portal in the new year. So existing members will see the benefit of that. But you also get exclusive member only webinars that include Cameron now as well. So just wanted to give everybody a bit of an update on what we're working on. So again, thank you for the support. Next slide, Terry. We'll quickly run through some of these questions for anybody who wants to stick around for another 5. We might have to do these as a really quick shotgun answer, I'm afraid. Terry, just be mindful of time.
Yeah.
So the first one, anonymous question, but what are your views on the Winter Valley and Ballarat region? It appears to have a tremendous amount of infrastructure in both private and government spending. REA is recently listed in the top 100 suburbs in Australia. What are your thoughts on that? One thing I'll quickly say on it, Winter Valley is a market that had been really hard slammed on with investors probably 4 or 5 years ago. Some of the vacancy rates did spike there for a while. I think it's a great market right now in terms of being able to buy at a discount. You're probably buying properties there below replacement cost. Just do your due diligence in terms of availability of other rentals that are similar, because I do think there'll still be a little bit of a yield issue there unless you're buying really well. That's my 2 bob on that, Terry.
Yeah. Look, my comment is more on Ballarat generally. I think there's great value for money buying in Ballarat. It's a strong regional city with a strong past and a strong future. There are still a number of suburbs in Ballarat where you can buy houses, typically with median prices in the 400,000s. That sort of affordability is hard to find. Great links to Melbourne. There's a lot of Ballarat ticks a lot of boxes, and I'm aware of Winter Valley is one of those suburbs which offers that sort of element of affordability that people are seeking but finding it harder to find.
Yeah. We got one from a good friend of our business, Michael Budlander. If someone has timed the market and sees these 15% plus growth for a couple of years, would you suggest selling, taking advantage of that growth, but then rebuying a steadier market? I'll throw that one to you, Terry. I've had that conversation with Michael in the past.
Yeah, look, absolutely not. Buy good assets and keep them. I think, when you sort of selling something to buy something else, you're losing a lot of your growth in, capital gains tax and selling fees and all that. Buy good assets and keep them. Use the equity that you've built up with the growth to help you buy more. I think the success as property investors is gained from accumulation of good assets.
Yeah.
If you've had that level of growth, those are good assets. They may have a pause in growth after 3 or 4 years, but they will go again if they're because they've obviously got the credentials for future growth. The sort of things I talk about in that new book, Why Property Values Rise, are the sort of places that will show growth over 10 years and longer. So keep them, use your equity to buy others. You don't need to sell good properties to fund the purchase of new properties.
That's it. All right, one from Rebecca Liu. Is Darwin still worth investing in now? We sort of touched on that one a bit throughout the presentation. It's buyer beware in that market now. So sort of reflect on previous comments we've made. We've got a question about Baklava in regional South Australia. Is it a good area to invest? I've got about 350,000 maximum that I can borrow for an investment loan from the bank for a second investment property, and checking on other areas. Anything else that you'd advise on here, Terry?
Look, I don't know that this is a location in regional South Australia.
Yes.
Look, I don't know it well enough to comment.
It's probably too small for us, to be honest. Yeah.
I think so. I'd be inclined, at that price level, there are places you can buy that are more substantial. We're actually just talking about one that I hadn't really considered that strongly. Just earlier this week, Colac in regional Victoria, where you can buy houses in the 300,000s. It's actually a bigger centre, and it's got quite a lot of infrastructure impact. It's got multiple facets to its economy. It's not just agriculture, there's also tourism and resources and other things happening there. And it's an incredibly consistent market, one of those markets I like. So I'd be more comfortable in that price range in a location like that.
Very good. We've got a good question here from Rob Chambers. He said, with when we did the 2024 and then mid 2025 and then the end of 25 growth figures, Terry, it was prop track, and Cotality, and he's asking, Rob's asking why we had to put Cotality in the end. Was that due to the publication of prop track data at the time?
Yeah, yeah. I mean, it was just that that data was available, and I mean, the numbers are not always exactly the same, but the trends they show tend to be
Yeah,
very similar. So, yeah, there was it was
it
just
just
the
wasn't
available.
available at the time of
Yeah,
production. Yeah.
that's right.
Okay, really quick one from Sanders. What's your comments on the Toowoomba market now?
Look, would have been great to have bought there 3 years ago, but it's still a market that's got a lot of upside in it. You know, it's there's a lot more growth to come in Toowoomba. It's had some growth, and it's harder to find really affordable purchases unless you consider that sort of small units. You know, you can buy those little ground floor units with some land content at affordable prices. But because they haven't yet started building their billion-dollar hospital, and because the Inland Rail Link is still heading towards Toowoomba, you know, the nation's biggest infrastructure project, $33 billion, and Toowoomba's the Queensland hub for it. There's still a lot to come in Toowoomba, so but you're probably going to be spending perhaps, you know, 600,000 to 700,000 to get a solid house there now, whereas 3 years ago you could have got something around 400,000. So
Yeah. Look,
that's
I still think the unit market there is absolutely right for the picking. It's a great market. You'll give up a bit of yield on the houses and you'd still do very well in terms of growth, but units, you could do both. You'll get the capital growth and you'll get the yield.
yeah. You know, if I had to nominate a regional city that I think it's got just a massive future and it's going to really perform for property, I'd say, you know, Toowoomba would be very high on my list of my short
Yeah.
list.
Yeah. All right. If we quickly move over to the next two slides, Terry, you've got your contact details in mind. We'll just share that. There are a few questions still unanswered there, but look, I feel like we did answer them in as a broad brush throughout the presentation. If anybody does have any lingering questions, by all means feel free to reach out to Terry or myself, and we'll be more than happy to get back to you.
Yeah.
Thank you very much to everybody for your time today. Lastly, just to finish off, not only do I want to wish everybody a very Merry Christmas, but also just take a moment to mention the Jewish community and our Sydney siders for what you're going through. You're in our thoughts. And yeah, I wish you all the best, and we look forward to seeing everybody in 2026.